I love to trade currency crosses. Major currency pairs that include the US dollar are usually driven by the outlook for the US economy, US data, and the market's appetite for US dollars. Currency crosses, on the other hand, which exclude the US dollar, are the real relative value trades. These are the trades where fundamentals, monetary policy direction, and news matter. This week, I banked 153 pips trading currency crosses. 4 trades, 4 winners, 100% accuracy in our set it and forget it 40 pip trades. Including my day trades, we made 263 pips, which included a mix of majors and crosses. 4 trades only, 4 winners, 100% accuracy. You can do it too. Before I explain how you can do it, let's take a look at those trades. Before every week begins, I formulate my fundamental views and construct my fundamental heat map for the week. With Omicron ripping across Europe and the Bank of Canada making a monetary policy announcement after a very strong jobs report, 2 of my strongest views for this week were bearish euros and bullish Canadian dollars, which is why I kicked off the week on Sunday Asia trade with a short Euro-CAD trade. Scrolling back to the beginning of the week, I sold Euro-CAD just as it was breaking my zip indicator line at 144.79. I gave my reasons why, which you'll see right here. I said I liked selling Euro-CAD because Omicron cases were spreading rapidly in Europe. Worries grow about tougher holiday restrictions. The German zoo survey, which measures investor confidence, I felt was going to be weaker. We were coming off a very strong labor data, which actually should be negative Euro-CAD, not Kiwi-CAD. There was a rise in oil prices, which is positive for the Canadian dollar. And the Bank of Canada was meeting this week, which I expected for them to be hawkish. Most importantly, though, Euro-CAD was dropping below the zip indicator line, moving into our downtrend territory. And, I put the trade on at the Asia Open on Sunday evening, and boom, I wake up to my profit targets being hit, which is exactly what I like to see. In the New York session on Monday, I still liked selling Euro-CAD. I thought it still looked good. So after seeing a brief retrace in Euro-CAD over here, I sold it again at 144.49. Now, in this case, the fundamentals were still pretty much the same, except that we already had a sharp drop in German factory orders, reinforcing the reasons why, the Eurozone economy is weakening and why, I felt that selling euros would be a good idea. So I sold euros. I took profits a hair earlier, but it ended up hitting the profit target anyway. On Monday night, Tuesday morning Asia, I sold Euro-CAD again. This time I sold Euro-CAD at 143.94. Now this was a slightly tougher trade because we were already deeply oversold. But we had IVPMI coming up, and I felt strongly that it was going to be good given the strong labor market numbers. And boom, I wake up well before IVPMI is released, and my Euro-CAD profit target was hit. Then, with the news flow that was happening, we had a pound Swiss trade. In this case, on Wednesday, the Financial Times started to report that the UK would announce new COVID restrictions, like work from home, vaccine passports. With virus cases nearing January highs, which were the highest levels ever, I avoided any dollar trades because of the Fed's taper plans and my view that the US CPI was strong. So I wasn't going to sell pounds against the US dollar. Instead, I turned to pound Swiss, which had just, with the background, had just turned red into the sell zone. And so we sold pound Swiss at 121.92. And by the Asia session, the profit targets were hit for a total of 153 pips on our 4 smooth 40 trades. So how can you trade crosses as well as I do? Number 1, follow the news flow, like we did with the pound trade. We knew that was bad news, and it was going to have residual effect on sterling. Stay on top of upcoming rate decision and who's likely to do what. This is extremely important because monetary policy direction is one of the most influential factors on how currencies move. And this upcoming week, we have 4 monetary policy announcements, so monetary policy direction will be even more important. Only trade on the side of zip, whether we have a sell in the red zone or a buy in the green zone. And don't be greedy. Know when to stop trading. And lastly, Take easily achievable swing trading targets like 50 pips and keep on pressing the trade again and again. Now, you can't expect to win 100% of your Forex trades 100% of the time, but there will be weeks where if you're selective enough, you can achieve results like this from time to time. What's really important is winning at the end of the day, winning at the end of the week, winning at the end of the month. That's really the targets to focus on. At BK Forex, I focus on a 100 pip a week target and winning as many months as possible. Meanwhile, we also use Zip to day trade all week. The difference between the trade ideas in Channel 0, Kathy Trade Signals, and Channel 1, Kathy Smooth 40, is that the 0 channel is more actively traded with more ideas, smaller stops, and targets. Channel 1 is more selective, where we basically have less frequent ideas, and they're more of a set it and forget it channel, or set it and forget it stream of ideas. We made 109 pips in my day trades, 154 pips with our Smooth 40 trades, for a total of 263 pips this week. I invite you to trade with me every day with Zip, the only technical indicator you'll ever need, at bkforex.com.